even these ETFs and funds are also just paper gold. I mean, where is the actual gold?
So ETFs and mutual funds are both give same kind of exposure to metals. ETF is exchange traded fund, and it is listed on exchange. Any person who has a
Equity market is also doing well. The gold is also doing well. Silver is also doing well. So how does one look into these factors?
yes, so historically what we've seen that gold is hedged against equity markets. When equity market falls, gold normally increases. Okay, but
A question that investors should ask before buying gold, but rarely do.
so I've seen most of the investors they normally come and ask the outlook and where will the price will go, sort of thing. No, hardly any investor asks.
Hello and welcome to Ventura Spotlight, a podcast series that brings you thoughtful conversations with minds shaping India's investment landscape, exploring their philosophies, experiences, and lessons they have gathered along the way. In this episode, we are pleased to have with us Satish Dondapati, Fund Manager at Kotak Mutual Fund. Satish has over 16 years of experience in Kotak Mutual Fund and currently manages a wide range of index funds and ETFs across sectors, factors, and market segments with a combined AUM of over rupees 20,500 crores. So let's get started. Hello and welcome to our podcast, Satish, and it's good to have you with us. So thank you for joining us today.
Thanks for inviting, sir.
Yeah. So before we start into the entire thing, so can you you have got nearly, I think, more than 16 years of experience in the investing field, and so how did you get into the passive side of the investing? Is something which I would like to understand that.
Right. So before Kotak, I used to work with most of the insurance companies and in distribution. Like I done sales for insurance and mutual funds. Always had excitement to work with manufacturing side, in AMCs. So in 2008, I got an opportunity as a product manager for ETFs and passive funds. So I took that opportunity, and now it is like almost like 16 years, 17 years. Okay, and at the time the passive industry was very small, and hardly it was the market shares are around 0.1% or maybe less than 0.5%. Now it is the industry is close to around 13 lakh crores, a total passive funds AUM, which is approximately 17% of the industry AUM. So yeah, in last 16 years I enjoyed, learned a lot of things. I worked in product department. I worked in did some sales, and now into fund management. So this is my journey in Kotak, and the industry is looking far more good, going forward. Currently it is around 70% market share, and maybe in next 5 years it will cross around 20% market share. What we are expecting.
So there is always a challenge which keeps on going on, and a lot of debate between active and passive.
Right.
And there are always different schools of thought. So I know that you are more in the passive, so you'll have a little bit of a bias towards passive. But how would one, as an investor, and how should he look at investing in this environment? Whether he should go for active or whether he should go for passive. So any personal thoughts you have about that?
So in last 5 years or maybe in last 6-7 years, basically the passive funds has grown. Different type of passive funds has came. Earlier it used to be plain vanilla passive product like Nifty 50 ETF or Nifty 50 index fund. Now there are a lot more factor based funds have came up in last few years, and their purpose is to solve the investors investing requirements. Like for an example, any investor who has who is very aggressive and wants to take momentum call. Okay, so we have momentum funds. For investors who are very conservative, we have quality and value funds. So these index funds are work as an active fund without any fund manager bias, and follow a specific investment strategy with very low cost compared to active funds. So for investors, these index fund and ETFs, especially passive funds, are you can say they will give the advantage of active funds as well as with a lower cost. So it normally solve all the purpose of investors. So that's why we are seeing that the growth which has happened in last few years, it is tremendous. Especially post 2014 when EPF was allowed to invest in ETFs. Post that, I think the most of the institution and retail people has participation in passive funds has increased drastically.
Okay. So, Satish, one question which I have is, specifically on the passive side, like, we are seeing a lot of momentum right now in, gold and silver. And again, these are being, again, international commodities. So, it's not something which is only unique to India. So, in terms of gold and silver, how do you see this entire rally? What has been your journey in that in the last 1 or 2 years, and where do you see it going forward?
Yes. So in gold and silver, the rally has started around 1.5 years back. At this point of time, in last 1 year return, if you see, gold has given approximately 65 to 70% return, and silver has given more than 150% returns. Okay, the rally was mainly driven by central bank buying. If you see, I'll just give some figures. Uh, Pre-COVID, till 2020, the central bank, world over, central bank used to buy approximately 300 to 350 tons of gold on a yearly basis. Then post COVID, especially after the Russia-Ukraine war, when the Western countries have seized the Russian assets, post that all over the central banks have started buying gold around 1,000 tons yearly. That is 3x what they used to buy in 2019-20. So the reason why they are buying so much of gold, because they want to they have a fear, like what happens to Russia, the same thing happens to them for other countries. That's why they're decreasing their US dominated assets, and they're buying gold. And this and apart from that, there are other few reasons why the gold and silver are risen. Especially the expectation on lower interest rate scenario. In these kind of scenario, gold and silver normally perform well. Then geopolitical tension, one of the other reason where gold price are getting support at higher levels. And coming to silver, silver also has a safe haven buying. Plus, it is also a industrial metal. So there is a huge demand in industry like solar, AI, EV category, where silver normally have a have a very high demand. So combining all these factors, last 1.5 years, gold and silver has prices have gone up very sharply. And going forward also, I think these factors will help to maintain these prices at higher levels. Of course, there are some pullback may come, maybe due to increase in US dollar, due to increase in US dollar. Or maybe any kind of good economic data comes, it will may pull back these prices for a short term. But the long term, we are very bullish on gold and silver. Till the time central banks are buying gold, I think one should keep some percentage of their portfolio in gold and silver.
So, I think those were very interesting statistics that, the central bank buying has gone up from 300 tons to nearly 1,000 tons.
Right.
I mean, that's a huge
That's a 3x what they are
3x
buying. Yeah.
jump in that. And the other is even the geopolitical factors which are
Right.
there. So, when we look at, the geopolitical factors have been going on for quite a while.
Right.
I mean, we all thought that the Russia war will be a short-term affair, but it has actually become more like a long-term. We are also seeing trade wars. We are seeing the Israel-Gaza
Right.
tension, which has been also going on for
Right.
quite a longish period of time.
Right.
So, amongst these, if you can call these as maybe short-term phenomena, are there any other structural changes that you are seeing in terms of that it would sustain this bullish trend for gold and silver?
See, apart from that, there is a huge interest, by investment demand. So earlier, people used to allocate approximately 3 to 5% in their portfolio, but now the shift has changed. Okay, people are increasing their gold and silver portfolio to 15 to 20%. See, so that is one of the that is one of the factor which going forward will keep prices higher. Apart from that, I know the interest rates in the lower interest rate scenario, normally gold and silver perform very well. I think that interest rate, in the US, basically, if you say only the 2 or 3 rate cuts has happened till now, maybe going forward more are expected. So with this factor also, I think prices will go up. And one of the main, threat for central banks is the confidence in fiat currencies. So this is one of the reason, like central banks are actually shifting from US dominated assets to gold. So these are the few factors which will drive up gold and silver prices going forward.
Okay. So what you're saying is that also the allocation on the investment side is actually, which was 3 to 5%, has now gone up to nearly 15 to 20%, right?
Right.
So I have a question on that. Is that according to you, in your view, what should be a ideal asset allocation in gold and silver
Yeah.
by investors?
Right.
Is that
So,
the right percentage?
So yeah, basically, first of all, just to clarify for the investor, like gold and silver investment is not for return enhancer. Okay, basically, one should invest in gold and silver to diversify from equities and other asset class. So gold, the right percentage is basically we are actually suggesting people to 15-20% to take exposure. But in that 15 to 20% also, one should have gold. If a customer has an aggressive customer, they can increase the silver allocation a little bit more compared to gold. If a person has a conservative, he can keep gold as higher allocation in that 15 to 20%. So just to see that instead of chasing the returns of gold and silver, you just invest in gold and silver as a portfolio diversifier, not to increase the returns.
Okay. So
And strictly, should maintain your asset allocation as per risk and time horizon.
okay, so you should not go overboard over there in that
Right.
sense. I
So
think.
yeah, basically, most of what we have seen that in a recent rally, most of the people have invested when the prices are raising. Okay, they have taken a tactical allocation. So that is like once the prices will come down, like silver has a very volatile. Okay, if it goes up, when it will come down also very quickly. So in precious metals, one should take a strategic allocation, not as for a short term investment.
Oh, okay. That's a very important statement. That have more of
Right.
only as a strategy and not as a tactical allocation
Right.
in your part of your portfolio.
Right.
But one thing which has been going around of late was that we have been hearing that the physical prices of silver were quoted somewhere around $85 per ounce in China,
Right.
and they're saying that China has also put curbs even in terms of the export of silver. And at other side you have the futures market, which is also determining the price of silver, and that was somewhere around $74. So how does one navigate through so much amount of information? Because in case of gold and silver, the news are not restricted just only from India,
Right.
right? I mean, because it is a international commodity, and prices are determined by the
Yeah,
international
exactly.
markets.
Right.
So how does one decipher all this set of information?
Yes, you rightly said that gold and silver prices are determined by international market, not by India. Even though India is a biggest consumer for gold and silver, but the prices are determined by international market. So as you said that recently China has actually curbed the imports. They have put some restriction to import silver, and there the physical market is prices in physical markets are much more than future market, and it has reached around $85 per ounce in the last week of December, I think. And also the demand of Chinese consumer very high. People used to in China, basically China again, like India, in China also there's a culture to buy gold jewelry and physical gold. So they are buying, historically they normally buy hard assets, okay, real estate and gold and silver. But in last few quarters or in last 1 2 years, the real estate market in China was not doing that much well. Okay, so people have shifted to gold and silver. So the demand comes from there. Okay, so that's why they don't see the prices normally as such. Okay, they want physical silver in hand. Okay, that's why the price has gone up to $85 to $90 in last week of December.
Oh, okay. Acha, so that is basically the individuals buying around over there.
Right. Yeah.
And how does this the ban of exports? How will that impact the prices of silver per se?
Yeah, so the ban of export, the reason why they are banned because it's an industrial metal, silver. Okay, even 70, approximately 60 to 70% of the solar panels and EV equipments normally produced by China world over. So they also require most of the silver. That's why they have included silver into critical mineral list and to consume internally. And so that's why they have one of the reasons they have banned silver because of that. Okay, and this the impact will be approximately 13% globally if since most of the silver Western countries they normally used to import from China. So that is now restricted to very few companies who can export silver, who have approximately around annual turnover around 80 tons or so. Those kind of companies are allowed to export. So that will be that will not suffice for the industrial demand of the other countries. So that's where the prices are actually sharply risen in silver, specifically in silver.
Okay. Now we also have various ways in which you can invest in India.
Right.
One of the most preferred way of traditional way of buying has always been physical,
Right.
specifically in terms of gold. So people have always liked to see the gold, but now of late we have seen where you have ETFs. You have also had a phenomena of digital gold, and
Right.
one of the question which we are asked by a lot of investors is that even these ETFs and funds are also just paper gold, right? I mean, where is the actual gold, right?
Right.
So can you actually throw some light in terms of what exactly goes on behind the scenes
Right. Yeah.
in terms of managing the assets?
Right. So in India right now, if anybody wants to invest in gold, there are four options available. One is physical gold, digital gold, ETFs, gold ETFs, and gold mutual funds. These are the. We used to have the SCBs, sovereign gold bonds earlier, but now government is not issuing new issues for them. So that was one of the best, alternative or one of the best option to invest in gold appreciation plus interest. But now it is not available. So coming to these four options, we'll talk about digital gold first. In digital gold, it is not governed by or regulated by SEBI. Okay, so we don't know whether the any of the entity which is issuing digital gold, whether they are actually keeping the same amount of gold into the vault or not. Okay, so another is like different digital or different apps are issuing at different prices. There is no price transparency in digital gold. And recently, if you see, SEBI has issued us some notification regarding digital gold that people
Correct.
are actually buying gold. So they have issued some caution on digital gold part. So the reason why digital gold has got famous or increasing, investor participation, because you can buy with 10 rupees also. Okay, in some apps even you can buy less than 10 rupees also.
Oh, wow.
Okay, so if so that's a very small amount, and people think that I can buy with 10 rupees I can buy gold every day. So that's why the participation has increased. But since it is not regulated by SEBI, so we will not recommend to invest in digital gold. The second option is physical gold. Okay, people who are like ultra rich or HNIs who can buy physical bars. Okay, and they can put that bars into their vault, and they can take that expenses for vault expenses. They can have physical gold with them, but that is very expensive because opening a vault and keeping and paying that expenses are very high. And apart from that, if any person who are actually buying a gold coins or maybe with a small amount, so there is a risk of theft if they kept in their house. Okay, so apart from that also there is a purity concern is also there in terms of jewelry. Like if you're buying jewelry for investment or maybe coins or any gold ornament, So there is a risk of theft as well as a risk of purity. So the third option comes is third and fourth option is ETFs and mutual funds. So ETFs and mutual funds are both like give same kind of exposure to metals. ETF is exchange traded fund, and it is registered on exchange. Any person who has a demat account and broking account can buy ETFs online through their broker and accumulate ETF units. And whenever they want to sell, they can sell it on exchange. The same way the way you buy shares and the way you buy shares and sell shares. And it is very convenient. The prices are real time, and also it is regulated by SEBI. And liquidity is there is no liquidity problem. If you want to buy 1 crore, 10 crore, 50 crores, you can buy and sell that kind of amount on exchange. And the last one is mutual fund, gold funds. Okay, gold mutual funds. This is again, same. These gold mutual funds normally invest that amount into a gold ETF only. The only difference is that this is basically settled on a day and NAV. ETFs you buy at a real time price. If you are buying at 12 o'clock, whatever the prevailing price at 12 o'clock, you will get that price. But in gold fund, you will get the day end price. Same like mutual funds. Okay. So and another difference is ETFs has a very low expense. Gold fund has a little bit higher expense than ETFs because underlying fund is ETF. What are the money which comes into gold funds? The scheme invests into gold ETFs. So it is the only difference. And people who wants to accumulate through SIPs, I think gold mutual funds are the best option for them for a long-term investors.
So also can you just to clarify again that I understand because that digital gold is not permitted by SEBI. So just clarifying that for investors who are looking at this podcast.
Right.
So what happens for the ETF when you have an ETF, right? So where is the gold lying?
Okay.
The underlying of that.
Right. So in ETFs, in gold ETFs, in every unit is backed by physical gold. So let's say for an example, today the scheme has got an inflow of let's say 100 crores. So the moment 100 crores came into scheme account, we buy 100 crores worth of gold bars. Okay, which is LBMA gold bars, London Gold and Market Association gold bars, which is certified by LBMA, and SEBI has asked us to buy that bar only for gold ETFs, which is 995 fineness. Okay, the moment we receive the funds, scheme receive the funds, we buy physical bars of 100 crores worth, and we keep that bars with our custodian, with our vault agent. Okay, every mutual fund has their custodian and vault agent. They keep that gold with vault and issues units to the investors. So at any time, on a yearly basis, there are 4 audit happens. One is 2 by internal audit by AMC and 2 by SEBI auditors. Okay. So they have to check whether the gold is there or not. And every gold has a specific number. And apart from that, any gold bar which if by any chance if it goes out of vault, then that their good delivery norms will be broken, and it will not be accepted again in any of the worldwide. So whatever the gold which we buy, we buy through vault to vault. The gold moves from vault to vault, not from outside.
Okay, so very interesting.
Yeah.
So that means it is even audited 4 times in a year.
Yes.
So 4 times in a year the audit happens.
Yes.
2 by the AMC and 2 by SEBI, and even the gold only moves from vault to vault.
Yes.
So I think, and so all ETFs are actually backed by physical gold.
Each and every unit is backed by physical.
Okay. And same thing will apply even to silver.
Same thing applies to silver, right?
Okay.
Yes.
So now, given the current environment, and there'll be a lot of investors would also be having the FOMO, fear of missing out.
Right.
So, what would be your advice to investors who are currently looking at investing in gold and or silver? So, what is your preference in terms of silver or gold or both? And if they have to invest, whether they should do it lump sum or whether they should do a SIP, and if an SIP, what time horizon they should look at?
Right. So since gold and silver has rallied so much, okay. So at this point of time, if any investor wants to invest, so we suggest you should invest in a staggered way. Do an SIP for the next couple of months. Okay, because the thing is that we don't know like tomorrow what will happen. Okay, but the factors are intact. with that factors, like I said, that central bank buying, low interest rate scenario, global geopolitical tension. So these factors will support gold prices. But any news on a good economic news or strength in US dollar may pull back these prices a little bit down for a shorter term. But at this level, since both these metals are trading at an all-time high, so the suggestion will be like people should invest in a staggered manner, not in lump sum. Okay, and the and what kind of percentage they should invest in gold and silver? As I mentioned earlier, the allocation should be in around 15 to 20%, as per the risk and time horizon. An aggressive investor again can keep a little bit higher allocation, but a conservative investor can keep low allocation, somewhere 15-20%.
Okay, so stagger over the period of next 6 months is what one should look at, or
Yes, I think next few months, around 6 to 7 months,
okay,
and better to do an SIP in gold and silver,
okay,
because the thing is that since you are allocating around 15% into silver and gold, okay, so investing in SIP money is the best way. So I think systematic investment is the best way to invest in going forward in silver.
and
Lump sum is
for people who have already bought can stay invested
Yes,
right now.
the people who has already
and
have
ride
an
the rally.
exposure, people who have already exposure in gold and silver, they have to reallocate, or maybe they have to see the portfolio position, and they can rebalance in their portfolio position according to the risk appetite, and what kind of percentage they are comfortable with, that they can rebalance their portfolio.
But your outlook is positive on the gold and silver
Yes.
as of now.
Yeah, we are very positive on gold and silver. The slightly pullback may come because that these prices are very high, all time
Short
high.
term, yes.
Short term price, price may come down, but yes, longer term, we are bullish on gold. So one thing is that till the time central banks are buying, I think there is no, like, because they know better.
Correct.
They are buying to diversify from US treasuries or maybe US dollar dominated assets. So till
So
that
I
time,
think
yeah.
a key thing is to keep a watch out
keep
on
a watch
the
on
central bank buying,
Right.
which is there. Okay.
Right.
There was always a, historically there used to always be a gold and silver ratio.
Right,
That
yeah.
silver used to maintain a ratio vis-a-vis the gold.
Right.
How relevant it is still today? Because most of the time it was never followed that ratio.
Right.
But many people keep on talking about it. So how much relevant do you see that ratio to be, and should one
Okay.
follow or
So
it should
yeah.
not?
So before that, I'll just explain what is gold silver ratio. So gold silver ratio is that how much silver you can buy with 1 ounce of gold. So for an example, let's say for example today the gold price are around $4,500 per ounce, and silver is around $85 per ounce. If I divide 4,500 by 85, it will come somewhere close to 54. So the ratio is 1:54. With 54 ounces of silver, I can buy 1 ounce of gold. Okay, so historically, if you see, like in last 50 years, gold silver ratio is somewhere close to 1:65. Okay, 1:65 is the ratio. But in 1980s, the ratio has gone down to 1:13 also, at the time of Hunt brothers.
Okay.
Okay, and in 2011 silver boom, the ratio was close to around 1:30. Okay. And in COVID time, the ratio was around 1:125.
Oh, okay.
Okay. So the higher gold silver ratio suggests that gold is expensive, and the lower gold silver ratio suggests that silver is a little expensive compared to gold. So this is basically the scenario of
So what is is there any ideal ratio, or
so no, there is no ideal ratio. This is just an indicator, like
Okay.
where is the gold price are. We can like historical, after seeing the historical gold silver ratio, you can anticipate that where are the prices today. Okay, so there is no, but but this is not an indicator to invest. Okay, along with this, one should also check macro factors. Okay, before investing into gold and silver. Gold and silver ratio is not the only indicator. What I want to say.
even the old school thought, and everyone used to keep on talking about that, that gold is a hedge against equities. right?
Right,
I mean,
yeah.
so that's what is the norm, right?
Hmm.
However, we have seen that the equity market is also doing well, the gold is also doing well, silver is also doing well. So how does one look into these factors?
So, historically, what we've seen that gold is hedged against equity markets. When equity market falls, gold normally increases. Okay, but in late, like in last few quarters, we have seen both these, equity and gold has rallied together. Okay, this kind of a scenario normally comes when there is a huge like liquidity in the system. Okay, and there is a lower interest rate scenario. At this point of time, people normally investors wants growth as well as safety. So that's why they invest in both these assets, equity and gold. That's
Okay.
why in this kind of scenario, normally both these assets normally performs very well.
Okay.
Okay.
Acha. Okay, fair enough. So, Satish, you also mentioned that that central banks are buying gold, and mainly it is happening because of them reducing their dollar-denominated assets, right? So, do you have any figures, or do you any sense of things that that you also mentioned that the buying, which was on an average was around 300 tons, has now gone up by 3x,
Right. Yeah.
has
1,000
been
tons.
an increase, 1,000 tons. Right? So at what level would they stop, because they will also have only as much amount of dollar assets, right, which they
Right.
can sell. The maximum you can make it zero. You can't go beyond that, right? So any sense of any numbers where you
So,
have in mind?
yeah, so basically, if you see, historically, or maybe in 1970s, if I'm not wrong, okay, the reserves of central banks into gold is around 40%. Okay, currently it is close to around 25%. Recently, it has crossed euro. Okay, as a global currency. The number one global reserve assets are in US dollars, and second is now gold. Okay, earlier,
Okay.
2 months or maybe 3 months back, it used to be euro. Okay, so now
Okay.
gold is the second highest currency now. So going forward, if these kind of like geopolitical tensions, or economic uncertainty, or de-dollarization, or confidence, if the confidence in the US dollar will decrease, automatically the percentage of reserves for gold will increase. Okay, apart from the central banks, even people will also start allocating more into gold and silver. Okay, so maybe I am not I'm not able to give the exact number how much it will go.
Correct.
But historically, if you see, the highest was approximately around 40%. And going forward, if the tensions will not ease, I think it is possible to go that level also going forward. Yeah.
Okay. And currently, any idea how much would be that percentage?
It is 24%, 24,
Okay.
25%. It is
Oh,
slightly higher than euro.
approximately.
Yeah.
Okay. Slightly higher than the euro. So it
Yes.
is as of today, even till today also, dollar assets are higher
Higher. Second is now gold. Yeah.
second is now gold.
Yes.
Okay, I think that's also a very interesting
Right.
statistics. Okay. So, I think we had a good conversation. So, when you are seeing prices so haywire, and, silver has always been volatile during the day, and the markets are even during the night, because
Right.
being an international commodity. So, how do you unwind yourself at the end of the day?
So, it is very difficult to cut off from the screen, because, it is our daily work. Like, since it is the international market, global indices normally work till 2 o'clock, and again it starts in morning 4 o'clock. So we have like, we have to be in constantly watching screen even before sleeping, or maybe once we wake up. Okay. But yeah, this is a part of life. It is our work. We have to do it. And to reset our mind, I make sure that I should go at least 3 to 4 times into the gym. And on weekends I do some external activities like playing some sports. And if I get any time on a weekend or a long weekend, I go for traveling and come back with a clearer and calmer mind.
Uh, so thanks, Satish, and
Yeah.
we just will do as we do it all our fund managers. We want to do a rapid fire with you. So if you can have that,
Yeah,
no.
sure.
So if your fund had a movie title, what would it be?
So, since I'm into passive investment, and we always suggest investor to invest for a longer term, I think the suitable title will be the long game.
What's tougher, predicting markets or predicting client patience?
Predicting client patience is much tougher.
Uh, One habit you wish every investor should not have.
Every investor should not have
Hmm.
continuously checking their portfolio.
Your personal red flag indicator in a portfolio.
I think over concentration to any specific
Okay.
asset or sector.
So allocate
Yeah,
appropriately.
right.
Okay. Hmm. If it weren't in investments, what job would you be doing?
Actually, if I'm not in investment
Hmm.
field, okay. So might be I was into IT industry as a software professional. The reason I'm saying because during my graduation times I had done lot many IT courses. Okay,
Okay.
at the time it was Visual Basic, Java, C, C++. So along with my graduation, I did lot many things. Okay, if
Okay.
I'm not been into investment, maybe in as a I will be working as a software professional.
So all time high, excitement or caution?
Caution with discipline, yeah.
Okay. If current metal markets was a sky, is it clear, cloudy, or should we carry an umbrella?
It is cloudy and expecting storms.
Oh, okay. Hmm. One word that describes the current gold scenario.
Transition.
A question that investors should ask before buying gold, but rarely do.
So I've seen, most of the investors, they normally come and ask, the outlook and, where will the price will go, sort of things. No, hardly any investor asks that, what kind of role this gold will play in their portfolio. So I think this is a question people should prefer asking before investing into gold.
So thank you, Satish. It was a pleasure having you on our Ventura Spotlight. Thank you very much.
Yeah, thank you very much, sir, for inviting me. Thanks a lot.
Thanks for tuning in. If you enjoyed this video, hit the like button and subscribe for more content that makes your financial journey smarter with Ventura. Mutual fund investments are subject to market risk. Read all scheme related documents carefully